Welcome to our comprehensive guide on P2P lending, also known as peer-to-peer lending. In this video, we'll break down what P2P lending is, how it works, and why it's become such a popular alternative to traditional banking. Whether you're a potential borrower looking for flexible loan options or an investor seeking new opportunities, understanding P2P lending can open up a world of possibilities. Let's start by exploring the basics and setting the stage for a deeper dive into this innovative financial model. P2P lending is a method of debt financing that enables individuals to borrow and lend money without the use of an official financial institution as an intermediary. Instead, online platforms connect borrowers directly with investors. This system allows for potentially lower interest rates for borrowers and higher returns for investors compared to traditional banks. The process is streamlined and often more accessible, making it attractive for people who may not qualify for conventional loans. Growth of the internet and digital technology has fueled the rise of P2P lending platforms. These online marketplaces make it easy for borrowers and investors to connect, review loan offers, and complete transactions securely. With just a few clicks, users can access a wide range of lending options, compare rates, and make informed decisions. This digital transformation has made P2P lending more efficient and accessible than ever before. Borrowers' P2P lending offers several advantages. The application process is typically faster and less cumbersome than traditional bank loans. Many platforms cater to individuals with varying credit backgrounds, increasing the chances of approval. Borrowers can often secure loans at competitive interest rates, and the flexibility of loan terms allows for better financial planning. This makes P2P lending an appealing choice for those seeking alternatives to conventional lending. Investors are drawn to P2P lending for the potential of higher returns compared to traditional savings or investment products. By lending directly to borrowers, investors can diversify their portfolios and choose loans that match their risk tolerance. Many platforms provide detailed borrower profiles and risk assessments, helping investors make informed decisions. This direct approach can be both rewarding and empowering for those looking to grow their wealth. P2P lending platforms act as intermediaries, facilitating the connection between borrowers and investors. They handle the vetting process, manage loan agreements, and ensure that payments are processed smoothly. These platforms also provide tools for risk assessment and customer support, making the experience seamless for both parties. Their role is crucial in maintaining trust and transparency within the P2P lending ecosystem. P2P lending platforms offer a variety of loan types to suit different needs. These can include personal loans, business loans, student loans, and even real estate financing. Each loan type comes with its own terms, interest rates, and risk profiles. By providing such a wide range of options, P2P platforms cater to a diverse audience, making it easier for both borrowers and investors to find the right fit. P2P lending process typically begins with a borrower submitting a loan application on the platform. The platform then evaluates the application, assigns a risk rating, and lists the loan request for investors to review. Investors can choose to fund all or part of the loan. Once the loan is fully funded, the borrower receives the money and begins making repayments according to the agreed schedule. The platform manages the repayment process and distributes payments to investors. Risk assessment is a key part of P2P lending. Platforms use various criteria to evaluate a borrower's creditworthiness, such as credit score, income, and employment history. This information helps assign a risk rating, which influences the interest rate and the likelihood of loan approval. Investors rely on these ratings to make informed decisions and manage their risk exposure effectively. Interest rates in P2P lending are determined by the platform based on the borrower's risk profile and market conditions. Generally, borrowers with higher credit scores receive lower rates, while those with higher risk may pay more. For investors, these rates represent the potential return on their investment. The competitive nature of P2P platforms often results in attractive rates for both parties. Once a loan is funded, borrowers are required to make regular repayments, usually monthly. The platform manages the collection and distribution of these payments, ensuring that investors receive their share promptly. Late payments or defaults are handled according to the platform's policies, which may include reminders, late fees, or collection efforts. This structured process helps maintain order and reliability in the P2P lending system. Despite careful risk assessment, some borrowers may default on their loans. When this happens, platforms have procedures in place to recover funds, such as contacting the borrower, arranging payment plans, or involving collection agencies. Investors should be aware that defaults are a risk, but diversification and platform safeguards can help mitigate potential losses. One of the best ways for investors to manage risk in P2P lending is through diversification. By spreading investments across multiple loans with different risk profiles, investors can reduce the impact of any single default. Many platforms offer tools to automate diversification, making it easier to build a balanced portfolio and protect your investment. Transparency is a cornerstone of successful P2P lending platforms. Clear information about borrowers, loan terms, fees, and platform policies helps build trust among users. Reputable platforms provide detailed reports and regular updates, ensuring that both borrowers and investors are well informed throughout the process. P2P lending is subject to various regulations depending on the country and platform. These rules are designed to protect both borrowers and investors, ensuring fair practices and financial stability. Platforms must comply with licensing, reporting, and consumer protection requirements. Staying informed about regulatory changes is important for anyone involved in P2P lending. Both borrowers and investors should be aware of the fees associated with P2P lending. Platforms may charge origination fees, servicing fees, or withdrawal fees. These costs are usually disclosed upfront, allowing users to make informed decisions. Comparing fee structures across platforms can help maximize returns or minimize borrowing costs. Qualify for a P2P loan, borrowers typically need to meet certain criteria, such as minimum credit score, stable income, and valid identification. Each platform sets its own requirements, which may vary depending on the type of loan and risk profile. Understanding these requirements can help borrowers prepare stronger applications and improve their chances of approval. Investors must also meet certain criteria to participate in P2P lending. Some platforms require a minimum investment amount or restrict access to accredited investors. Others may have age or residency requirements. It's important for potential investors to review platform policies and ensure they meet all necessary qualifications before getting started. Choosing the right P2P lending platform is crucial for both borrowers and investors. Factors to consider include reputation, user reviews, loan offerings, fees, and customer support. Researching and comparing multiple platforms can help you find the best fit for your needs and goals. Look for platforms with a strong track record and transparent practices. Security is a top priority for P2P lending platforms. They use encryption, secure payment gateways, and identity verification to protect user data and transactions. Regular audits and compliance checks help maintain a safe environment. Users should also take precautions, such as using strong passwords and monitoring account activity to further safeguard their information. P2P lending has expanded rapidly across the globe, with platforms operating in many countries. This international growth has created new opportunities for cross-border lending and investment. However, users should be aware of local regulations and currency risks when participating in global P2P markets. The worldwide reach of P2P lending continues to drive innovation and financial inclusion. One of the most significant impacts of P2P lending is its role in promoting financial inclusion. By providing access to credit for underserved populations, P2P platforms help bridge the gap left by traditional banks. This can empower individuals and small businesses, fostering economic growth and opportunity in communities around the world. Technology is at the heart of P2P lending. Advanced algorithms, data analytics, and artificial intelligence help platforms assess risk, match borrowers with investors, and streamline operations. Mobile apps and user-friendly interfaces make it easy for anyone to participate. As technology evolves, P2P lending platforms continue to innovate and improve the user experience. Let's look at a typical example of P2P lending in action. Jane needs a personal loan to consolidate her debts. She applies through a P2P platform which reviews her application and assigns a risk rating. Multiple investors decide to fund her loan, attracted by her strong credit profile. Jane receives the funds quickly and repays the loan over time, while investors earn interest on their contribution. Now consider a small business owner who needs capital to expand operations. Through a P2P platform, the business owner submits a loan request which is reviewed and funded by multiple investors. The business uses the funds to grow, and as it succeeds, repays the loan with interest. This win-win scenario highlights how P2P lending supports entrepreneurship and economic development. P2P lending isn't just for personal or business loans. Students can also benefit by securing education loans through these platforms. For example, a student applies for a loan to cover tuition fees. Investors fund the loan and the student repays it after graduation. This approach can make higher education more accessible and affordable. Real estate is another area where P2P lending is making an impact. Borrowers can secure loans for property purchases or renovations, funded by multiple investors. These loans are typically secured by the property itself, offering added protection for investors. Real estate P2P lending opens up new opportunities for both borrowers and investors in the property market. P2P loans differ from traditional bank loans in several ways. They often have faster approval times, more flexible terms, and competitive interest rates. However, they may also carry higher risk for investors and less regulatory protection. Understanding these differences can help you decide which option best suits your needs. While P2P lending offers many benefits, borrowers should be aware of potential risks. These can include higher interest rates for those with lower credit scores, strict repayment schedules, and the possibility of negative credit impact if payments are missed. It's important to read all terms carefully and ensure you can meet your obligations before accepting a loan. Investors also face risks in P2P lending. The main risk is borrower default, which can result in loss of principal. Other risks include platform failure, changes in regulation, and economic downturns. Diversification and due diligence are key strategies for managing these risks and protecting your investment. Before investing in P2P loans, it's essential to conduct thorough due diligence. Review borrower profiles, risk ratings, and platform policies. Consider starting with small investments and gradually increasing your exposure as you gain experience. Staying informed and cautious can help you make smarter investment decisions. Many P2P platforms offer automated investing tools that allow investors to set their preferences and let the platform allocate funds across multiple loans. This can save time and help maintain diversification. Automated investing is ideal for those who want a hands-off approach while still participating in the P2P lending market. Income earned from P2P lending is typically subject to taxes, just like other investment income. The specific tax treatment depends on your country's laws and the type of income received. It's important to keep accurate records and consult a tax professional to ensure compliance and optimize your tax situation. Good customer support is vital for a positive P2P lending experience. Reputable platforms offer multiple channels for assistance, including phone, email, and live chat. Prompt and helpful support can resolve issues quickly and provide peace of mind for both borrowers and investors. With the rise of smartphones, many P2P lending platforms now offer mobile apps. These apps allow users to apply for loans, monitor investments, and manage accounts on the go. Mobile access makes P2P lending more convenient and accessible than ever before. User reviews and ratings can provide valuable insights into the reliability and performance of P2P lending platforms. Reading feedback from other borrowers and investors can help you identify strengths and potential issues before committing. Look for platforms with consistently positive reviews and high ratings. Many P2P lending platforms foster a sense of community by offering forums and discussion groups. These spaces allow users to share experiences, ask questions, and learn from one another. Engaging with the community can enhance your understanding and help you make better decisions. P2P lending platforms are constantly evolving to meet user needs and adapt to market changes. Regular updates, new features, and improved security measures are common. Staying up to date with platform developments ensures you benefit from the latest innovations and protections. Ethics play a role in P2P lending, especially regarding responsible lending and investing. Platforms should promote fair practices, prevent predatory lending, and ensure borrowers are not overburdened. Investors can also choose to support loans that align with their values, such as green projects or social enterprises. Future of P2P lending looks promising, with continued growth and innovation on the horizon. Advances in technology, expanding global reach, and increasing demand for alternative finance solutions are driving the industry forward. As platforms evolve, we can expect even more opportunities and improvements for both borrowers and investors. If you're considering a P2P loan, start by researching multiple platforms and comparing offers. Prepare a strong application with accurate information and be realistic about your repayment ability. Read all terms carefully and ask questions if anything is unclear. Responsible borrowing can help you achieve your financial goals while maintaining a positive credit history. For investors, start small and diversify your investments across different loans and risk levels. Use platform tools to monitor performance and stay informed about market trends. Be patient and focus on long-term growth rather than quick gains. With careful planning, P2P lending can be a valuable addition to your investment portfolio. There are several myths about P2P lending, such as it being unsafe or only for those with poor credit. In reality, reputable platforms use robust security measures and serve a wide range of borrowers and investors. Understanding the facts can help you make informed decisions and avoid common misconceptions. Many borrowers and investors have found success through P2P lending. From consolidating debt to funding new businesses, these stories highlight the positive impact of this innovative financial model. Learning from real-life experiences can inspire confidence and provide valuable insights for your own P2P journey. Sum up: P2P lending is transforming the way people borrow and invest. By leveraging technology and connecting individuals directly, it offers flexibility, opportunity, and innovation. Whether you're a borrower or an investor, understanding the risks and rewards is key to making the most of P2P lending. Thanks for joining us on this journey into the world of peer-to-peer finance.